Investing in the stock market can help you achieve your financial goals, but it can be intimidating to get started if you're a beginner. So, today we're going to walk through the steps you need to take to start investing with confidence. First, it's important to set your investment goals. You need to have a clear idea of what you're investing for and how much risk you're willing to take. Are you investing to get rich? Or is it for a comfortable retirement? Maybe you have extra cash and you are looking for what to do with it. All there are good reasons. Make sure you know what your reason is. Next, you need to learn the fundamental principles of stock market investing. How to research stocks, how to manage risk, and how to diversify your portfolio. This will help you make informed decisions about where to invest your money. There are some very useful links in the description of this video for easy to understand, relevant information regarding these questions. The next step is to choose an investment account. You need to decide which type of investment account is best for you based on your investment goals, risk tolerance, and other factors. There are many different types of investment accounts to choose from. These include individual brokerage accounts, retirement accounts, and college savings plans. Again, see links in the description. Once you have your investment account set up, you can select your investments. This is where you need to be careful about fees. There are many fees associated with investing, such as brokerage fees, trading fees, and expense ratios. These fees can eat into your returns over time, so it's important to choose investments wisely. Also, it is important to regularly review and compare fees across different investment options. As you select your investments, you should also create a diversified portfolio. A diversified portfolio includes a mix of stocks, bonds, and other investments to help manage risk and maximize returns. This is an important step in building a successful investment strategy. Once you have your portfolio set up, it's important to monitor your investments. Keep track of your investments and review your portfolio regularly to ensure that it continues to align with your investment goals and risk tolerance. You should also stay informed about the latest news and trends in the stock market and continue to learn about investing strategies and opportunities. Finally, it's important to start small and be patient. Begin with a small investment and be patient as you watch your portfolio grow over time. Remember that investing is a long-term strategy and that it takes time and discipline to see meaningful results.